We are making this video to help you understand the basics of investment. Market capitalization is an important topic in investment. However, it is rarely understood. Today, we are going to talk to Mr. Melvyn Chung Kai To, Managing Director of AXYS Stockbroking, to learn more about this topic. Mr. Chung Kai To, thank you for being with us today. Can you please explain to us the term market capitalization and its importance when it comes to investment?
Okay. The market capitalization, or as we say, short-term market cap, gives you an idea of the size of a company. So usually the larger the capitalization is, most of the time we say that the company is a stable company, a well-known company that has been around for a long time in the economy of the country. Let's say, for instance, in Mauritius, the largest capitalization is MCB. MCB has nearly a couple of centuries of existence. It's considered safe investment. Another one would be, for example, IBL, which is the largest Mauritian company, which is also considered as a safe investment and a stable company. But that's the idea of the market capitalizations. It will also include what we call as blue chip companies, which similarly are large companies, not necessarily the largest ones, but large capitalizations and companies that will be less affected in case of economic downturns. So those are blue chip companies, which are indeed large capitalizations. So when you come to investment, you need obviously to have a look at that, just to give you a brief idea of how to decide on any kind of investment.
Okay, thank you very much for this. Could you please give us an example of how market capitalization is calculated?
Okay, it's pretty straightforward. You have a company and a number of shares for that company. So just to calculate the market cap, you take the market price, so the share price that you have on the stock exchange, and just multiply it by the number of outstanding shares. For example, if you've got a company with 250,000 shares and the share price is, let's say, 200 rupees, the market cap would be 50 million rupees.
Okay. Why is it important for investors to know the market capitalization value before investing?
It's important to know that just to have a high-level idea of what a company is. Let's say, for instance, you see a market cap for a company of 1 million rupees. So it's a tiny company, a super small company that is quite risky to invest in. If you have a company with, let's say, 100 billion rupees market cap, it would be a much bigger company, so a much more solid company in theory. So that will be just the first snapshot, let's say, when you consider an investment.
Okay, thank you. And why can't we use only market capitalization value as an indicator of the company's value?
Okay. You need to be aware that the market cap is just number of shares multiplied by the share price. It doesn't necessarily mean that the company is sound financially or is profitable. You can have let's say, two companies with same market caps, but one is making profit and the other one is making losses. So obviously you won't invest in a company that is making losses, you invest in the other one. So that's why you cannot only use that. It's just one, probably the simplest or the most straightforward criteria when you analyze an investment. But obviously afterwards you need to dive into more details and have a proper analysis of the financials of the company.
Okay, thank you for this insight. Lastly, what are the factors that affect market capitalization value?
Okay, to be aware, you've got you only have two factors. The first one is the number of shares. Most of the time, it won't change. More or less, it stays the same unless you have particular events. I'll come back to it afterwards. The second factor is the share price. So that when you are in the stock exchange, on the stock market, you buy and sell shares at a particular price, and prices will go up or down. That will be the main factor why your market cap will move. It will depend on demand and supply. If there's more demand, the price will go up, so obviously your market cap will go up. If there's more supply, so more sellers in the market, your price will go down and the market cap will increase. Coming back to the second criteria, the number of shares, it will depend afterwards if a company has to probably issue shares because they need more capital, more funding, and that will be probably another factor that will affect your market cap.
Okay. Thank you very much, Mr. Chung Kai To, for these wise words. I hope this will help our viewers understand, and we look forward to have you as one of our panelists on our upcoming event.
Thank you.